What's up everyone, it's Karthik with MoneyVest. So welcome on board for another Market Open live stream. We had the jobless claims number come out a little bit earlier today. So in about 30 minutes ago, we did have the jobless claims as well as the numbers related to ADP non-farm payrolls that were a little bit lower, below expectations. We do have the ISM Services Index and the Manufacturing Index coming out at 9:45 and 10 a.m. Eastern respectively. And the markets right now, pre-market, slightly lower. So QQQs are down about 30 basis points, and we got the SPY down about 6 basis points, so more or less flat. But Tesla seems to be doing incredibly well, up a little bit over 2.6% right now, back up to over $225. I did a video on both Tesla and Palantir earlier today, so make sure that you do check that out if you haven't already. And once again, thank you so much for joining, everyone. Really appreciate you all. And drop a like and let me know in the chat if the audio and the video is working well or not. Just want to make sure that everything is working well. There's no technical difficulties. So here we are. Tomorrow is the big day because we got the unemployment numbers coming out for the month of August. So that is going to be very, very important, of course. And we'll take a look at what the markets are now expecting in terms of a recession versus rate cuts versus inflation. And if you come over to the reports from earlier today, we had 99,000 for the ADP non-farm payrolls versus consensus of 140,000. So that was way below expectations. And then when it comes to jobless claims, we had 227,000 below consensus expectations of about 230,000. So again, a little bit lower on both accounts. Lower on this account is actually good news because that is one of the most important leading indicators that we look at to better understand whether more and more people are filing for initial claims or not, or unemployment benefits. And then ADP non-farm payrolls is just telling us how many jobs were added according to ADP, which is, again, a payroll company on a more private basis. So that is something that came in a little bit below expectations as well. So tomorrow, again, like I said, is the big number, big day. We're going to be taking a look at the unemployment numbers, the rate unemployed persons. We'll calculate what the unemployment rate is, and then also take a look at the average hourly earnings, wages, all that good stuff at 8:30 a.m. Eastern. So I will be live to cover all of that. Good morning, everyone. So perfect. Everything is working well. Sam, trust that you're doing well. Audio is okay. Yep. So doing well. Everything is perfect. And we're just about getting ready for tomorrow. And September, as we know, that historically has been one of the worst months from a seasonality perspective, but there's actually a very interesting data point that I wanted to share today, which is if we actually see a really weak start to the month of September, then the rest of the month actually tends to be a little bit better. So what we have here is S&P 500 returns after a 2% or more drop on the first day of the S&P 500, right, of the month of September. And this is going back as far as 1955. And every time we've actually seen a drop of over 2% for the S&P 500 in the first day of the month of September. Rest of September, on average, has been 3.4% higher, with a median gain of 3.4% also, with a 72% probability that it's going to be higher. So yes, while we did witness a pretty brutal start to the entire month of September, and especially the first day and the second day, Tuesday and Wednesday, we continue to see some acceleration to the downside. It's not over yet. I mean, there's been few occurrences like 1982, 1974, 1955, 2002, and then we had September 2002 and November 2007 during those times when the markets, this is not just looking at September, but this is looking at all of the data points. And you'll notice that September over here, September over here. Let's see, this September 2002, September, let's see, this is September 1974. So there's been some instances where, of course, when we have seen, brutal starts to the month, markets have continued to roll over. And unfortunately, this has been most of the times in September, for those months to continue to sell off. But other months, if you account for all the months put together, the average and the median gain of about 3.4% with a 72% probability that it's going to be higher. Hey everyone, how many Nvidia shares do you have? So I currently have a put, which is what I sold last week as part of our options trade, and currently, if assigned, I will have about 600 shares And then I'll be looking at selling calls on Nvidia. However, I'm also contemplating rolling out up and out my options, out and strike and up. Up and strike really in a sense that we'll be looking at rolling them out of the money a little bit further, and then further out in expiration. So that's the plan. I'll see what the premiums are like today. If not, then I'm fine, having Nvidia shares in and around those call spaces. We'll continue to dollar cost average a little bit and then look at selling calls, because call premiums are also on a weekly basis, especially if we're looking at the money, are actually pretty good. We're looking at $2 to $3 per contract. I think there was also as much as $3.50 per contract, which is good $2,000-$3,000 in premiums in just 1 week that I can make. And of course, if Nvidia continues to slide lower, that is really what I have to be careful about, because that would really make those premiums lower, because I really don't want to sell a call with a strike below my cost basis. So that is something we have to keep in mind, because that's one of the first rules of selling calls in the first place, is to not pick a strike below your cost basis, because then you're basically guaranteeing a loss for yourself. So that's where we are. Hope you all are doing great. Tesla's on a bit of a run here, 2.7% higher after the 4% gain yesterday. So Tesla doing incredibly well. I did a video both on Tesla and Palantir earlier, so make sure that you check out that video as well. And also drop a like and share this video with other people who may want to join. I would really appreciate that, and we can have a pretty lively and engaging discussion regarding the markets here. Volatility is coming back down, almost 2%, so a little bit under 20. But this again is, still pretty elevated levels from where we were just a week ago, in the low 15s. And we were talking about how the VIX does spike in the month of September. So this should not come as a surprise to anyone, because this right here is the seasonality that we have talked about for volatility in the month of September, with the average and the median value at almost 25 to as much as 20 for the VIX. And majority of the times it actually stays above 20. So this is quite fitting with how September has been for volatility. When we have been red in the month of September, every September that we have seen the markets go down, we've gone down by an average and median of about 4.3%. So S&P 500 right now is down a little bit over 2%. So maybe another 2%, 3% gain on average or median is possible for S&P 500. Do you think Tesla will rally into October with the robotaxi event on the horizon? Depends on how safe the FSD will be versus human driver. I think it's going to be a lot more safer with human drivers. I mentioned this in our Tesla and Palantir video, that there was a study done which essentially shows that 94% of accidents on the road happen due to some kind of human error and distraction. And with robots, or really just full self-driving, with the car driving itself, that's going to be eliminated, because there's going to be 100% attention on the road at all times, because that's one of the benefits of having a robot, is that they don't tire, right? They can go around the clock, keep working 24/7 without feeling the need to sleep or rest or eat or anything, right? So there's never going to be any distractions. So that human error element of driving is going to be taken out. And that's really what the whole idea is, to take risk off the roads. And I laid out a whole thesis in that video, so definitely do check that out, as to why this is only going to make the roads more safe. It's going to eliminate all drunk driving. It's going to eliminate distracted driving. It's going to eliminate excessive speed. Like, there's a lot of benefits to allowing for full self-driving on the roads. Of course, we have to account for the safety, because that's, I think, the core piece of all FSDs, like to make it safe, right? That's why I think they're doing it in the first place. Of course, all the productivity that unlocks with having more time while driving is secondary, but I think a much bigger reason and much bigger benefit to this is making it all safe. With 5 to 6 million accidents on the road every year is a crazy number. 46 to 47,000 fatalities is a crazy number, and that's really what Tesla and a lot of companies that are working on FSD are trying to solve, is to how to make that number go down, down, and down, and take risks off the road in the US and of course globally as well. So in my opinion, I think this is a big game changer. It's only a matter of time, as we already know. Over time, it's only going to get better with the more data that it collects, and fewer intervention of humans between miles driven. So I think that's a That's a big benefit and definitely an advantage for Tesla moving forward. And when you combine cheaper vehicles with full self-driving, then it's game over. And then you combine the lower interest rates and gas efficiency, or excuse me, the savings of electric vehicles over gas vehicle cars. So that again is essentially a huge tailwind for Tesla to benefit off of. From a technical perspective, from a stock perspective, there's definitely been a lot of resistance for Tesla that it's struggling with. I've been trading options on Tesla for well over a year. This year, I've done really well on Tesla options. I shared my entire options portfolio with all the members earlier today. And so far that portfolio is up a little bit over 30%, so can't complain. But we'll continue to cycle through Nvidia and Tesla, some of these stronger companies, high quality companies that I really don't mind holding for the long term anyway, and then also generating some premiums because they are high beta stocks and they do tend to pay out very good premiums. And you got the best environment of them trading sideways a little bit, right? Nvidia more recently, but Tesla's been trading sideways since 2021, so it's really been one of the worst long-term holds, especially in the last 3 years. But it's been one of the best tradable stocks in that time frame. Eventually, if you do break out, then that's great. If Tesla takes out its all-time high, then we're off to the races. What's next? What's going to be the next big number for Tesla? But until then, it still trades within a range where I think investors can take advantage of trading options. If you learn how to do them correctly, I think there's definitely opportunity there. So yeah, that was my quick little thoughts on Tesla. I did, like I said, a whole video on this earlier today, and also highlighted some of the resistance levels that Tesla needs to take out. So if you come over to Tesla here, next level is really going to be at $233. I sold a call yesterday at closer to $300, 1 month out. We'll most likely end up closing it before expiration, as most contracts, I end up closing them before the expiration. But $300 is going to be another 34% rally for Tesla in the next 1 month. Is it possible? Sure. Is it probable? Maybe not so much. It was down to I think like a 0.1 delta. So very, very low probability that option is going to expire in the money. But even if it does, I think that's an insane level to keep in mind for Tesla. But again, it's got to gobble up a lot of supply before it even gets up to that level. And that supply is sitting at 233 and very importantly at 270s for Tesla. Okay, Walter Pipica says, we're a long way away from FSD, especially in America. Politicians on both sides don't want to work. Also, who will pay when a robocar hurts someone? You have no laws for that technology. Yes, so again, insurance companies have to have a whole, reevaluation of how they insure vehicles, and of course how they, structure those premiums, and also who's going to pay for the damages, who's at fault. I think there's a lot of things that need to be evaluated. Absolutely 100%. I'm not saying that this is something that Tesla is going to start materially realizing in revenue starting tomorrow. No, it's just we're taking slow and steady steps towards that area, and it's giving everyone the time to figure out how it's going to be implemented completely within the system. But all I'm saying is that it's got incredible amounts of potential, and maybe premiums are going to be really low. You never know. Like maybe insurance companies may not like that very much, right? Because if safety drops, that's when premiums go up, right? So if you are a riskier driver, you're going to be paying higher premiums for auto insurance versus if you are a really safe driver. If you are, above the age of, I think it's 25 in the US, then your premiums are for auto insurance a little bit lower compared to if you're buying something before 25. But the idea is if cars overall in general become more safe, then there's going to be lower premiums because there's going to be less accidents, less fatalities, less damages. And as a result, everyone's going to have a good time. But at the same time, insurance companies may not like that very much because they want higher premiums, right? They want, because that for them is significant amount of income that they can then invest in other assets. And so it's true for almost every industry if you think about it, because it's kind of crazy because, the doctors don't want you cured because then that's one lost patient. A cured patient is a lost patient. And that can be true for almost every industry out there. If you are done with your services, if you've already gotten what you need, then that is a lost customer for that particular industry. And so there's that loop where you want to help them, you don't want to help them at the same time. It's always an interesting debate. But to your point, I think you're right. I think there has to be more time to figure out how all of this is going to play. in the US, Tesla has one of the highest insurance policies. That's interesting. Okay, so coming over to, okay, Kevin says uninversion. Yep, so we are starting to see the uninversion take place. We are, 1,300% higher. So the long end of the curve is uninverted now. So I actually had a screenshot for that also. So longest yield curve in uninversion in history has, inversion has in the history has ended with the 10-year treasuries now 1 basis point above the 2-year treasuries. And that lasted for well over 783 days, from July 22 to August 24. So 783 days, well over 2 years, is what this inversion lasted for. And we are now finally back in the positive territory by 1 basis point. And it's usually, as we already know, it's not the inversion that triggers a recession. It's the uninversion that triggers a recession. Every time you come back on the way up is what's caused the recession to begin. And tomorrow's unemployment report is going to be incredibly important. Like, I cannot emphasize enough how important the unemployment numbers from tomorrow are going to be, because that's really what's going to set the stage for the upcoming Federal Reserve meeting and for the remainder of the year, whether this economy is indeed weakening or if there's any strength left in the economy given how high interest rates are. So that is going to be important there. Seven says Palantir holding $9 average will DCA on all dips, market correction. That's incredible. $9 is an insanely good average. Don't you think that ASML is a buy at the current price, or should we be waiting for more downside? So ASML, I absolutely love. I think it's one of the best companies when it comes to semiconductors. And wow, it has come down to low 800s again. This is a stock that I was picking up in the $500 to $600 range. I've talked about this in my previous videos. I specifically even talked about how there's potential for 2x for ASML. And indeed, 2x from those levels, almost 100% increase to 1100. And then, of course, started to roll over amid all of this uncertainty regarding semiconductors. Do you guys want a whole breakdown of Broadcom's earnings today? Just let me know in the live chat. I mean, if you've got a lot of people interested in Broadcom's earnings that they're reporting later today, then I don't mind coming online, for a few hours, covering the earnings, covering the actual press conference, the everything. Because, they're also going to be telling us a little bit more about the overall landscape of semiconductors. And I'm sure Nvidia, AMD, Texas Instruments, Qualcomm, a lot of companies are going to be moving after hours for Broadcom, because the market cap is well over 700 billion. So let me know if that is something that you are interested in. A couple people saying no, so that's okay. Then we can just do a quick summary video after they've reported. Fong Mike, I signed up with your membership last week. Where can I find introductions to install Discord and get your alerts? Do give us a list of stocks ready to buy the dip of your channel. So yes, all you have to do is go on the app store, whatever you're using, download Discord. Discord is another application that we use. So it looks something like this over here. And then go to Patreon, follow the steps. You can connect Patreon through Discord, so it'll automatically invite you to our server. And then you'll be able to see all the channels. We've got investing channels, trading channels, private chat, everything on there. And then that will give you access to our stock sheet, which is our shopping list, all the stocks with our fair values, buy targets, everything included, as well as all the alerts. So Discord is another application. Download it through App Store, whether you're using Android or iOS, and then connect your Patreon with Discord, and then you'll be invited over to our server with an automatic role that you'll be given. Okay, Kurt says I hold Broadcom. Yes. So more yeses now coming in. So a couple no's, more yeses. Okay, I mean, I'll see what happens leading up to Broadcom earnings. If there's definitely interest in our Discord as well, then we'll listen it together. Otherwise, we'll just do a video, after they've reported. Anyway, so about a few more minutes until market opens. Let me just go over some more questions here. Wait, was your covered call for Tesla in November, though 2 months out? So yes, Thomas, I actually have, I had at least over 700 shares of Tesla in the past, of which 300 were called away back in July, when Tesla was well over $230 a share. So those calls were in the money, made some good money, and then of course it came right back down. So the November call that I've sold is for the 100 shares that are left. Right now, there's 400 left of the 700 because 300 were called away. So the November call is for 100, and the rest 300. I'm actually planning on selling more calls on Tesla, preferably today. Or even on tomorrow, because Tesla is very, very green, and so premiums are most likely going to be pretty solid. But I have to be very careful because those are 300 shares I'm not wanting to lose. The other ones was like, okay, I'm overexposed on Tesla since the beginning, so it's okay for me to get rid of it. I made some nice profit on it, and that was also discussed in our previous updates and the options portfolio as well, since it was part of my other portfolio. So that's where we're at, and I most likely will be looking at like 320s and 350s for strikes, which is way out of the money. And I know the premiums are going to be really low, but that's okay because I'm not doing it for the premiums. I'm doing it for some premiums. Let's just put it that way. While also maintaining that potential upside and the capital gain. Okay, let's see. Planning to buy more IBIT. So, yes, we'll dollar cost average a little bit into Bitcoin, but not a whole lot. And just want to keep my Bitcoin exposure a little bit contained. I would say well under 5%. And so don't mind picking up a little bit more IBIT. Bitcoin's definitely been selling off. More recently, it's just down about 2.2% on the day today. And resistance, again, it's coming up to its resistance at 60,000, 61,000, and trading inside this sort of downtrending channel of lower highs and lower lows. Overall market going down, tech down a lot. Market is shaky, but Visa holding strong, going up even. Why? So, we've talked about Visa in our daily market updates. It's had a very nice breakout over here. Was kind of struggling at that level for some time. It was trading in this lower high and lower low pattern. So this right here was the downtrend for Visa, and then a final breakout above this level, and now it's coming up to that resistance. Now Visa's kind of shaping up to be a nice little short at those prices as it comes up to that supply, and not to mention that it's also very overbought right now on the RSI and the MACD. So, wouldn't be surprised to see a little bit of a pullback on Visa, considering how much it's already rallied from those lows, from $252 back up to $280. That's been a nice 11-12% jump for Visa. What's the good price to buy Nvidia? I would say the Nvidia next support really sits in the low 90s. So this is the technical breakdown for Nvidia, and what we have here is a confluence of some higher lows. So a little bit of a steeper low here, and then a much broader higher low over here. So, and then of course you could argue that there is a head and shoulders also forming for Nvidia. So you see that confluence right there. It's going to be sitting roughly at $95, $97. I think that's a good price point to look into Nvidia. And of course, a breakdown below this, could potentially send us down in the $76, $77 range. We got validated here more recently at $92. That's where we were back on Monday, August 5th. The question was why Visa's having good times when others are suffering. So I haven't followed Visa from a more fundamental standpoint. I mean, it's a phenomenal company with very high margins. Could be the breakout, but there could be some other company-related events. Like I said, I haven't looked into Visa in some time, so maybe I can do some more research on that. But technically speaking, it was coming up to that resistance and got a nice little breakout, and it's since it's been pushing upwards. Visa is also a little bit more, I would say Visa, MasterCard tend to be a little bit more on the recession-proof side, although they do still rely very much on spending habits and people using their cards. But at the same time, when it comes to spending in general, all types of spending, people are still going to spend on utilities, on still in discretionary items and staples and industrials, like things like that. And so it does kind of become a bit more on the recession-proof side because it's spending all together. So yeah, very nice technical breakout for Visa. But coming over to Nvidia back, $92 is going to be that support down to $76. It is possible that it ends up trading down to that level. We just have to be very careful. I'm going to sort of tier my cash good puts very carefully. So either today or tomorrow, we'll be planning on rolling out my option. Otherwise, assignment is going to happen. Do you typically trade only these popular stocks, or are there any niche industries you enjoy researching as well? Cheers. So mostly technology, mostly high quality companies with good balance sheets and good fundamentals. Because if I am, trading, if I'm swing trading, or if I am, trading options, then it becomes very difficult to get out of a position if you are not trading a high quality stock, because Yes, some of the lower quality penny stocks, unprofitable companies may give you a lot of volatility and as a result may give you a lot of premium, but that won't be enough if you are just getting wrecked on that stock, right? Capital appreciation is the key to generating longer term higher returns because premiums are not going to be enough to compensate for that level of returns because premiums are great, they're good cash flow, but covered call strategy tends to generate a higher rate of return than cash secured put strategy because the markets tend to actually move higher on a more broader, longer time frame. So the idea is not to avoid assignment because even if I do get assigned here on Nvidia at 108, I can dollar cost average down and then immediately start selling calls because call premiums are high and I will be selling a little bit out of the money. Not only out of the money, but also above my cost basis. So that right there is capital appreciation potential for Nvidia, and that's going to add to my overall returns. Yes, Luis, sorry about that. So the thoughts on CELH, trade or investment. So Celsius, there's been a lot of debate in our, well, not really debate, but a lot of research and analysis shared on our platform for Celsius. A few of our members have been buying Celsius holdings. It actually took out a lot of supports for Celsius. So the next support is really going to be down at 27.50. I think it's got a pretty decent balance sheet. And if we come over to Celsius CELH on our MoneyVest platform, let's take a quick look. 11% down yesterday, but it's got a pretty decent M score, 3.66. So, that's something to keep in mind. Looks like we've got a pretty growing company, high growth across the board, good margins, good cash flow, good expansion for margins as well. And we've got a very good balance sheet also for the company with good current ratios. So it certainly looks like a pretty solid fundamental company. I don't think I've done a video on Celsius. Maybe a couple times I've talked about this in the past, but support level is going to stay at 27.50. So that right there would be that next support level to watch for Celsius holdings. And wow, this has been quite an interesting breakdown for the company, taking down all supports here, 67% lower, really oversold on the RSI and the MACD. So next support I would watch is 27.50 for Celsius. Okay, Kevin, well, I'm not in it for the money, so well, no, I am in it for the premiums. I'm in it for the money, but I'm just helping everyone understand that premiums is not the only reason for doing it, because the risk of losing your shares far exceeds the benefit of receiving the premium. Let me just put it that way. So you want to balance those two really well, that you don't take on too much risk in search for the premium, which results in you losing the shares and then capping your capital gains or your upside. So really it's finding the right balance and making sure that you are comfortable with where you are with your strikes, especially on the call side, because call side, and that's kind of interesting. Also, the debate we can have is like, what is more psychologically torturing for you? Is it holding on to an unrealized loss after getting assigned a cash secured put, or missing out on the upside potential after getting your shares called away in a covered call that's in the money? So what is more psychologically torturing for you? Is it the missed capital gains, missed opportunity, or is it the holding of the unrealized loss? For me, holding on to the unrealized loss, if it's a very high quality company, for example, whether it's Nvidia or Tesla, is okay. Like, it's not something that I would be stressing over. It's just something that, okay, I sold a put, it's in the money, I have shares gotten assigned to me. It's a high quality business I'm planning to hold. That's why I picked that company in the first place, is because I don't mind holding it for the long term anyway. So that's okay. But missing out on the capital gains, if your plan was not to miss out on all the capital gains, is what hurts more. It's like getting called away on your shares is certainly what kind of becomes a little bit more painful, right, in your mind. So that's what we're trying to avoid. That's why I mention everybody, like, if you're selling covered calls, be comfortable, be okay with getting your shares called away. If you're not okay with that, do not do it, because when you're selling options, the probability is high for success, but it's not 100%. So there's going to be a time in the market, like, for example, I'll give you a very simple example, right? Last Friday, when I was placing that trade on Nvidia, not in my right mind, I would have thought that Nvidia would do what it has never done. And to be frank, what no company has ever done, which is a single day biggest loss in the history for one company. $280 billion loss in one day. I didn't expect that, right? So markets are going to throw you a lot of curveballs along the way, and you just have to be ready for it. Because, the put that I sold had a really low delta, very low probability of getting in the money. Doesn't matter, right? Does not matter at all. Anything is possible in the markets. And, it did the one thing that I was expecting it to not do, which also had a very low probability for it, and it ended up doing it. 10% down day in one day. And I was like looking at the weekly candle, I was like, okay, 10% down week is not that common for Nvidia. I was looking at the volatility, the bell curve and everything. I was like, okay, it's a very rare event. Little do you know, it can do that one day. It can do that same amount of damage in short periods of time. And that's just the nature of selling options right there. Okay, yeah, so it's all about the money. Getting called away hurts. Definitely missing the gains hurt more. I can keep 100, 200 shares of Nvidia for 105 or even 108 because Nvidia is worth more and will be worth more in the future, and still you can sell covered calls. Yes, exactly. So the pain of getting called away hurts a little bit more than the holding of the unrealized loss. Anyway, so market's going to open in about a minute here or 30 seconds. And we've got QQQs down about 30 basis points. S&P's flat. Tesla's continuing to rally here, almost 2%. And Nvidia really struggling, under $105, so down about 1% on the day so far. We'll take a look at what Magnificent 7 has in store for us today. Yesterday, $87 billion loss for the S&P. $87 billion loss for Magnificent 7. And it was a very, very calm before the storm type day where markets continued to trade sideways. But of course, Tuesday was a lot of weakness. We saw like lower highs and lower lows and absolutely no buyers, no bidders stepping in. What would hurt more is getting assigned Nvidia shares at 140. Yeah, 140 would be pretty brutal. Nvidia honestly has been playing mind games with me and the buyer this entire week because, a couple days ago, Tuesday, after the 10% sell-off, it closed exactly at 108. Exactly at 108. And then yesterday, it spent most of the time at 109. Like, it was like way out of the money for most of the day, only for it to sell off last 30 minutes. It sold all the way down to 105, 106. And then today, we've got 105 right now, down about 70 basis points. So we'll see if there's any type of recovery intraday or if it's only going to get worse for the markets and for Nvidia. But in that case, I'll be looking at selling new puts for next Friday, and then of course rolling over the current contract that I have. So that's going to be the game plan moving forward. Is just rolling out a little bit, and we'll see what kind of premiums we can generate. I think premiums are good for Nvidia right now, even for Tesla on the call side. Premiums are very juicy. So what should I buy? Caddy command me. So I would certainly refer to our spreadsheets, our shopping list, and see what you can do more research on. I mean, those are 36, 37 stocks and ETFs that I really like and I prefer. And, some of them are a little bit more ETFs-wise and more leveraged ETFs-wise are more from a tradable perspective that we have to take into account the volatility and the markets and everything has to be accounted for. But other individual stocks, you have to really do the research and understand, okay, what's your conviction level or what's your analysis on the company, and then you can make a more sound decision with the buy targets that we've already got in place for those companies. Very good, Karthik. Very good example. That Nvidia of yours. Here we go. Let's see. Bonds are ripping. Let's take a look at TLT. And there we go. Up 26 basis points. And again, this is just market's way of getting very defensive, as we have discussed. That's been the theme. We got XLK technology once again struggling, down about 0.5%. And guess which sector is up? XLU, right? So again, if you come over to the chart that we have discussed on the relative performance, take a look at this. We continue to see more downside on this chart. It's down another 1% today. So money, once again, rotating into utilities and getting out of technologies. That's been the theme for the market since Since February, I would say, since even March of 2024, there's been a significant amount of underperformance on technology. And technology is actually not even the sector that is leading on the year. If you come over to performance year to date, it's utilities. Utilities just took over financials. Financials and utilities are kind of head to head at over 21% higher. And then you take a look at comm services. I guess you could make a case that there's Meta and Google involved in there, up 18%. But then if you come take a look at staples, we got healthcare, we got industrial. Technology is number 6. Number 7, actually. Number 7, 10.4%. So it's definitely struggled this year. You know what? Let me just include for S&P 500 so we've got a much better idea for this. And we'll also include for QQQs. So we'll include that as well. And then now if you look at the performance, come over here, year to date. S&P 500 is actually number 4, 16.6%. So utilities, financials, and comm services, all 3 sectors outperforming the S&P 500. And then everything is outperforming QQQs and XLK. QQQs are only up 13.5%. Even industrial and healthcare and staples are doing better than the NASDAQ 100. So that, again, is a very telltale sign that technology has struggled. There's been significant amount of underperformance and a lot of rotation out of technology over to other parts of the market. But I think it's very important to note that the long-term trend remains very strong. It's in the favor of technologies from a long-term perspective. These are more about tactical rotations, right? So if you want to be very tactical and very active with your portfolio, I guess you could switch from being defensive to aggressive, risk on, risk off. You could do that, but that's, again, sort of timing the market. You're realizing some profits, taxes. There's a lot of factors at play. It becomes more of a headache than anything else. But if you want to have a very simple strategy, then understand that there's going to be weakness in these parts of the market. And look, we don't cover a lot of utilities, a lot of materials or industrials or other sectors on the channel here. But I'm not saying that those are sectors that are just not worth looking into. It just depends on where you are with your investing journey, right? If you're a little bit more closer to retirement, technology can be very volatile for you, and you may want to reduce exposure into technology and move a little bit more into staples and utilities that are good dividend-paying stocks, good dividend ETFs that are going to be generating some nice income and also with a lot less volatility. But I've essentially been a little bit more exposed to technology because of my risk profile, the age profile, time horizon, all that stuff can take on more risk. So it really is, when you are constructing your own portfolio, you have to take into account a lot of things, a lot of factors at play here with where you are in life, how old you are, what's your retirement date, what's your end goal. It's really just bridging the gap between what you have and what you need. That's what you're trying to bridge over time. So yeah, utilities continue to perform better compared to technology, but the long-term trend stays still positive and in favor of technology. Nvidia back over 107, up over 1.2%. So Tesla is here back up to over $226, up over 3.3%. We're seeing some buyers finally starting to step in ahead of the unemployment numbers from tomorrow. So that, again, is going to be very important. We'll be live at 8:30 a.m. Eastern to cover that. And let's see, Procter & Gamble, heck of a year. It's done really well. Take a look at that. I mean, just straight up new all-time highs after new all-time highs. Year to date, the stock is up over 20%. Incredible, right? Incredible. Very, very prominent staples company. Pretty much selling you everything. Consumer household products, personal care. And 175 is where we're at for this. Incredible. Do you think Nvidia will go back to all-time highs? What do we think? When is Nvidia going to go back to all-time highs? Nvidia all-time highs when? Let's do 2 to 4 weeks. 1 to 2 months. 3+ months. Like 3 to 6 months we'll do. 3 to 6 months and 6 months or more. 6 months to 1 year. So when is Nvidia back to all-time highs? Let's do a quick poll here. And if you believe that Nvidia is going to be here no all-time highs in over a year, you can just type that in the live chat. You can just let us know that it's going to take a little over a year, more than a year, more than 5 years, whatever your expectations are, to get to all-time highs. So Sargil says, forget about Nvidia, man. It's Tesla's time. Let it pump up. Yeah, of course it is. I mean, I did a video on Tesla earlier today. So, I've talked about the tailwinds colliding all together. There's 3 big tailwinds with interest rates coming down. Especially if you take a look at how Tesla's behaved when interest rates were going up versus when they were coming down. So if I include for, let's see, auto rates, forgot what the ticker symbol is for that. Yeah, so this is 48 months. Finance rates on consumer installments, loans at commercial banks. Let's see, this is 60 months. Let me try that one here. Yes, so you'll notice that the interest rates on auto loans, as they have come down, I mean, Tesla's rallied very aggressively, and then they've stabilized as they have gone up over here in 2018 all the way through 2019. Started in 2016. Tesla was basically trading sideways. And then, of course, it started to come down again. Tesla had a huge rally. And then it's now starting to consolidate sideways. It's basically more stable. And if auto loans start to roll over again, as we are expected to see auto loans come down because interest rates are expected to get cut, this could be a new beginning for Tesla. And then you tag on the FSD, cheaper vehicle, more deliveries, record deliveries, profitability, curling back up. You've got a lot of tailwinds for Tesla. So 4.3%, a very, very nice move. Nvidia is back over $108. Man, my put buyer and me have had such back and forth this entire week. It's crazy. Like, this is the interesting part about trading options is you get to experience such incredible amount of volatility. Which I guess for some people may not be a good thing. So I'm definitely not doing a good job kind of marketing options here. Tesla 228, very, very nice momentum higher. QQQ's back positive, up over 27 basis points. And we got S&P up about 11 basis points. Coming over to Magnificent 7, Amazon is also leading, 178, up over 2.7%. Nvidia's up almost 2%. Apple, Meta, Microsoft also pushing higher, with Netflix and AMD are the only 2 stocks that are actually not quite part of the Magnificent 7, but we've still kind of kept them in there, down about 40 basis points each. So in our poll, we got 49%, majority of people expecting Nvidia to be back at all-time highs within 3 to 6 months. So more than 3 months, but less than 6 months in getting up to all-time highs. When does your Nvidia option expire? So tomorrow. Tomorrow's expiration for me. Tomorrow's Friday, and that's when my Nvidia option expires. We'll see if Nvidia can stay above 108 or not. I mean, it's just been flirting around $108 all week. It's come down to 104, 105. And then it's traded back up to 109, 110. And right now it's it's literally at 107.83. Just a little bit under $108. ACLS, sure, we can take a look at that stock as well. So continues to find weakness. And this right here is a little bit of a higher low for ACLS. And I would say that it's also, well, maybe not really, but you've got potential head and shoulders. We didn't quite come down to fill this entire gap here. A head and then definitely a right shoulder. Also looks a little bit something like else, but support level is going to stay at $96 for ACLS. So that would be the level to keep in mind. And a resistance up to $143. So this right here is also going to be that resistance, that huge area where it's struggling to break out of, right? That's been a big resistance for ACLS. So support level right over there at around $96. So 3 minutes, and we get the PMI manufacturing numbers. If this contracts a little bit below the consensus, then that again is going to spur some of that concerns over the recession fears. So in 3 minutes, we'll find out what that number is going to be for PMI composite final. So the consensus right now for PMI is 54.1, services index 55.2, and we will see what that number ends up looking like. So pullback on Zscaler, yes, I took a look at that, and Zscaler definitely got sold off quite aggressively here. It's now at a support. So on the weekly time frame and on the daily time frame, you can see a huge gap down here, and oversold RSI, oversold MACD. So maybe Zscaler is one of those companies that we look at from a options standpoint for selling options, selling put options for Zscaler. If you come over to puts next week, we'll take a look at what those premiums end up looking like once it's updates. But I think Zscaler reported some pretty good numbers. I think beat on EPS, beat on revenue, profitability is coming in. But it's definitely a very overvalued stock. It's definitely a stock that trades at very expensive valuation. And I think for that reason, it's important to recognize the risk related to higher valuations. And that's one of the biggest risks for any growth stock is the valuation, the multiples. That can always be a pretty big risk for growth companies. Market circumstances. There's always risk involved with every company. So the buy and hold, buy forever, hold forever strategy only works for index funds and ETFs. Only works for index funds and ETFs. There's absolutely no stock. Bring me one stock that you can buy and hold forever for the rest of your life and not ever worry about it. There's going to be companies that, yes, have done really well in, let's say, a 20, 30 year, 40 year time frame, but business cycles come and go. They grow, they mature, decline starts, and then they become a little bit more of a value and more dividend stock, right? So reloading this page, let's take a quick look. The PMI manufacturing IRS manager says 55.7. So if that is indeed correct, we came in a little bit better than what the expectations were. Markets are pushing higher just a little bit. I'm gonna reload this. It's gonna maybe take a couple more minutes. So we haven't received those numbers yet, but we'll keep reloading them every minute or so here. Okay, U.S. services PMI for August 2024 came in higher at 55.7 versus expectations of 55.2. Previous number was 55. Services grow in August. So that again suggesting for, I would say, a little bit of a stronger manufacturing data, or really just overall services and production data. I'm still going to wait for this number to update on the actual website because this was reported 13 seconds ago by Z4X Global. So again, I don't know how accurate they're going to be, but 55.7 is the actual number for Z4X Global here, and then forecast 55.2, and the previous is going to be 55. So that markets, I think there's a case for soft landing with that type of data because it's not super hot. So I guess we got 55.7 indeed for 55.7 indeed for the services index, and then composite sitting at around 54.6, which also came in a little bit better than what the expectations were. So consensus 54.1, and the actual came in at 54.6. And then 10 a.m. Eastern, we've also got numbers coming out for, what was that? So we've got numbers for the ISM Services Index comes out at 10 a.m. Eastern. So we will update everybody on Discord for that as well. So thank you so much for joining, everyone. Really appreciate it. Make sure that you drop a like and subscribe to the channel. If you are watching us for the first time, if you're new to the channel, we cover all fundamental analysis, technical analysis, options trading, macroeconomics, everything is covered. So make sure that you drop a like, subscribe if you haven't already. And links to our Discord and Patreon is going to be down below. 40% of you are expecting Nvidia to back to all-time highs within 3 to 6 months. And 26% of you guys expecting for Nvidia to take more than 6 months up to a year to get back up to all-time highs. Yes, I'll be live here tomorrow at 8:30 a.m. Eastern. We'll start at 8 a.m. Eastern to cover the unemployment numbers at 8:30. And then we'll analyze and dissect the entire report all the way till market open. So thank you so much. Happy investing. Happy Thursday.